Let me ask you something. When you heard that Elon Musk became the world's first trillionaire, what was your first thought? Maybe it was disbelief. Maybe it was anger. Maybe you scrolled past it and went back to checking your bank balance. Here's what nobody tells you though. The moment one person accumulates that much wealth, it doesn't just affect their life. It affects yours, your savings, your investments, your cost of living, your job. Whether you know it or not, $1 trillion sitting in one person's hands sends ripple effects through the entire economy, and most people have no idea what those ripples actually are. Today, we're going to break that down. Not to make you feel helpless, not to make you rage at the system, but to show you exactly what this means for your money and what you can actually do about it. First, let's understand how this happened, because it didn't happen the way most people think. When people picture a trillionaire, they picture someone sitting on a mountain of cash. But that's not how extreme wealth works. Musk doesn't have $1 trillion in a bank account. What he has is ownership. Here's the breakdown. SpaceX just went public. IPO price, $150 per share. Musk owns roughly 42% of SpaceX. At that valuation, his stake alone is worth hundreds of billions of dollars overnight. Then in February 2026, SpaceX acquired xAI, Musk's artificial intelligence company. The combined valuation of that deal, $1.25 trillion. $1.25 trillion. That's not a company. That's a country's GDP. He also still owns a significant chunk of Tesla. He owns X, formerly Twitter. He owns Neuralink. He owns The Boring Company. None of those assets are cash. They're ownership stakes in companies. And the reason this matters for your money is that every time one of those companies goes up in value, it doesn't just make Musk richer in theory. It changes how capital flows through the entire market. Think of it like this. The economy is a river. When someone builds a dam at one end that keeps getting bigger and bigger, the water doesn't stop flowing. It just flows differently. And if you're downstream and you don't understand where the water is going, you're going to be confused about why your end of the river sometimes feels dry. Let's put $1 trillion in perspective, because your brain isn't built to understand this number. If you spent $1 million every single day, it would take you 2,739 years to spend $1 trillion. Not 2,739 days, 2,739 years. You would have started spending in 700 BC, and you still wouldn't be done. The entire GDP of the Netherlands, one of the wealthiest countries in Europe, is about $1 trillion. One person. One person now controls wealth equivalent to the entire economic output of the Netherlands for a year. But here's where it gets personal for you. The S&P 500, the index that your 401k, your Roth IRA, your index funds are probably tied to, is heavily influenced by the companies Musk controls. Tesla is in there. SpaceX, now that it's public, will be in there. xAI will be in there. That means whether you know it or not, you probably already own a tiny piece of Elon Musk's empire. And when his companies go up, your portfolio goes up too. When they go down, and we'll get to this, your portfolio goes down too. This is the part most people skip. You are not separate from this story. You are inside it. Let's talk about SpaceX specifically, because the IPO is the event that actually pushed Musk over the $1 trillion mark, and it matters for your money in a very specific way. When a company goes public, it creates something that didn't exist before, a publicly tradable asset. Suddenly, anyone with a brokerage account can own a piece of it. SpaceX opened at $150 per share. In the first week of trading, it surged. Early investors, the ones who got in before the IPO, saw returns that most people won't see in a lifetime. But here's the thing. Most people don't talk about. IPOs are not when you make money. IPOs are when the people who were already in get to cash out. The venture capitalists, the private equity firms, the early employees. They've been holding SpaceX equity for years, waiting for this moment. The IPO is their exit. And when they exit, Retail investors, people like you, are the ones buying on the other side of that trade. That doesn't mean SpaceX is a bad investment. It might be a great one. But the framing matters. People selling you the dream of getting in on SpaceX at IPO have already been in for years. You're not getting the same deal they got. You're getting the deal they're offering you now. This is the same pattern every major IPO follows. It happened with Uber. It happened with Lyft. It happened with Rivian. And it will happen with SpaceX. The excitement is real. The hype is real. The wealth creation for early insiders is real. But the opportunity for retail investors is never as clean as the headlines make it sound. That doesn't mean don't invest. It means invest with your eyes open. While everyone is celebrating the SpaceX IPO, something else is happening that barely made the headlines. Tesla sales just hit their lowest point since 2022. Think about that. Tesla, the company that made Musk famous, the company that's still the foundation of his brand, is struggling. Sales are down. And the reasons are two things happening at the same time. First, the EV tax credit is gone. Under the new administration, the federal tax incentive for buying an electric vehicle was removed. For a lot of buyers, that was a $7,500 reason to choose Tesla over a gas car. That reason is gone now. Second, Musk's political activity is hurting the brand. There are protests happening at Tesla dealerships in multiple countries. In Europe, one of Tesla's biggest markets, sales are down more than 40% in some regions. People who might have bought a Tesla 2 years ago are now buying from BMW, Rivian, or BYD instead, not because the car got worse, but because the CEO became a polarizing political figure. Why does this matter for your money? Because if Tesla continues to decline and you're holding Tesla stock, that's a direct hit to your portfolio. But more importantly, it reveals something that applies to every investment you ever make. A company is not just its product. It's its leadership, its public perception, its political exposure, and its market timing. Tesla is a great car company with a serious brand problem. And brand problems are expensive. The lesson. When you're evaluating whether to own a stock, you're not just evaluating whether the product is good. You're evaluating whether everything around the product is sustainable. Now let's talk about something that hits even closer to home than your investment portfolio. When wealth concentrates at the very top, and we're talking trillion-dollar concentration, it doesn't just sit there, it moves. And when it moves, it affects prices. Real estate is the clearest example. Extremely wealthy individuals and the institutions that manage their money need places to put capital. And one of the safest places to park large amounts of capital has always been real estate. Not one house, portfolios of houses, commercial properties, entire neighborhoods in cities. When that much money is chasing the same limited supply of assets, houses, commercial buildings, land, prices go up. And when prices go up for people who have $1 trillion, they don't feel it. But when prices go up for someone making $60,000 a year, they feel every single dollar of it. This is not a political argument. This is supply and demand. More dollars chasing the same number of houses equals higher house prices. And the people at the bottom of the wealth ladder feel that the hardest. The same dynamic plays out in other asset classes: art, farmland, private equity. When extremely wealthy people need to diversify $1 trillion, they buy things you and I want to buy, and they drive up the price of those things. The question is, what do you do about it? This is the part that matters, because everything we just talked about is background. What you actually do with your money is the foreground. Here's the framework. Number 1, stop watching and start owning. The number one mistake people make when they hear about someone like Elon Musk accumulating extreme wealth is they watch it like a spectator. They follow the news, they have opinions, and they stay exactly where they are financially. The shift you need to make is from spectator to owner. You don't need to be on Musk's level to participate in the same systems he's using to build wealth. Index funds, ETFs, individual stocks, real estate. These are not tools reserved for billionaires. They are available to anyone with a brokerage account and $10 to start. The wealthiest people in the world do not leave their money in a savings account earning 0.01%. While inflation eats it alive, they own assets. And the gap between someone who owns assets and someone who doesn't isn't a matter of income, it's a matter of decision. Number 2, understand what you actually own. If you have a 401k or an IRA, go look at what's in it right now. I'm serious. Pause after this video and look. Most people have no idea what they actually own. And if SpaceX gets added to the S&P 500, which it will once it meets the criteria, and you own an S&P 500 index fund, you will automatically own SpaceX. Not because you made a decision, because the index was updated. Understanding what you own is not optional anymore. The market is moving faster. The companies in it are changing faster. And staying passive is its own form of a decision. Number 3, inflation is the real tax on people who don't invest. Here's the thing about extreme wealth concentration and what it does to prices that we talked about earlier. The people who get hurt the most are the ones who are holding cash. If your money is in a savings account right now, a regular savings account, and inflation is running at even 3%, you are losing purchasing power every single year. You are not standing still. You are moving backward. The math is simple. $10,000 in a savings account earning 0.5% after 1 year is worth $10,050 in nominal terms. But if inflation is 3%, the purchasing power of that money is equivalent to about $9,750. You have more dollars, but you can buy less with them. The wealthy don't have this problem because their money is in assets that grow faster than inflation. Your job is to do the same thing, at whatever scale you can. Number 4, don't chase the SpaceX story. By the time you're reading about SpaceX going public in the news, the trade is already crowded. The early money has already been made. The venture capitalists who funded SpaceX in 2010 made their money. Musk made his money. The employees with early equity made their money. That doesn't mean you can't make money on SpaceX going forward. But understand that you're entering a story that is already well underway. And entering a story that's well underway means your upside is more limited and your downside is more real. The better play, always, consistently, without exception, is to build a diversified base of ownership before the stories get hot. Index funds that capture the whole market, including the next SpaceX, before anyone knows it's the next SpaceX. Let's zoom out for a second. Elon Musk becoming the world's first trillionaire is not an isolated event. It's a data point in a longer trend. Wealth is concentrating faster than at any point in modern history. The gap between the top 1% and everyone else is not shrinking, it's widening. And the mechanisms that created Musk's wealth, tech leverage, network effects, AI, space commercialization, are not slowing down. That means more people are going to cross the billion, 10 billion, 100 billion mark in the next decade. And for each one that does, the same dynamics we talked about today apply. More capital chasing the same assets, more price pressure on housing, more influence over markets and policy, more divergence between the people who own the economy and the people who just participate in it. You cannot control how much wealth the top 0.01% accumulates. You cannot control where they invest it or how it affects prices. What you can control is which side of that equation you're on. Owning assets, even small amounts, puts you on the same side as the capital. You benefit when the market goes up. You get the compounding that their money is already using. The gap between someone who invests and someone who doesn't is not talent. It's not luck. It's a decision made consistently over years. Here's the truth. Elon Musk becoming a trillionaire is not going to directly help you. It's not going to make your rent cheaper. It's not going to pay off your debt. It's not going to show up in your bank account. But understanding what it means, understanding how capital flows, how asset prices move, how wealth compounds at scale, gives you a map. And a map is more valuable than sympathy. The people who look at this moment and say, "This is why nothing will ever change," stay exactly where they are. The people who look at this moment and say, "Okay, now I understand how this game actually works," those are the ones who start building. You know how the game works now. What you do next is up to you. If this video helped you see money